Now, let's have a look at the day's top business news. And for that, here in the studio is Brian Quinn. He's starting today. In the US, Google is facing its second major antitrust trial in less than a year, Brian.
Stuart, Google's parent company Alphabet in the hot seat once again as this trial gets underway Monday in Northern Virginia. It's the culmination of a lawsuit filed in January of last year in which the U.S. Justice Department and 8 U.S. States accused the tech giant of operating an illegal monopoly in the ad tech market. The government says Google controls the market for banner ads on websites, using its power to acquire potential rivals and eliminate competition in the space. They want to force the company to sell off parts of that ad tech business. Alphabet earned more than $200 billion last year through its online ad sales. The company says it's just one among hundreds involved in placing digital ads, and that the marketplace for such firms is growing, not shrinking. Just last month, though, a U.S. judge found that Google's dominance of the online search market constitutes an illegal monopoly. That ruling could also result in a potential breakup of the company. Alphabet CEO Sundar Pichai has previously insisted that user experience is at the heart of the company's practices. Here he is.
We've always focused on providing users the most relevant information, and we rely on the trust for users to come back to Google every day. In fact, a vast majority of queries in Google, we don't show ads at all, and we show ads only for a small subset of queries where the intent from users is highly commercial.
Now, next back here to France, the French Finance Ministry asking the European Union for more time to submit plans to reduce its debt.
So, Stuart, France technically has just 11 days left before it is due to turn in an official plan to bring down both its yearly budget deficits and its overall national debt. Meeting that deadline, though, has become nearly impossible due to the country's political deadlock, as President Emmanuel Macron spent more than 50 days trying to pick a prime minister who could survive a hung parliament after July's legislative elections. Meanwhile, the country's finances are looking increasingly perilous. Last week, outgoing finance minister Bruno Le Maire raised expectations for France's budget deficit this year to 5.6% of GDP. The EU limit for that is 3%. In June, Brussels issued an official reprimand to France for breaking the bloc's finance rules. Prior to July's election, the government had been seeking to cut spending by 25 billion euros this year. The French Treasury, meanwhile, says 110 billion in savings would be needed to be found over the next 3 years in order to hit that 3% target. New Prime Minister Michel Barnier is now in a race against time to get a draft budget submitted by mid-October. Here's Barnier.
The situation is very serious. I don't want to increase financial debt for our future generations, nor the ecological debt. I believe that, while managing public money better, managing taxpayer money better, we can make progress in the efficiency of public spending. That's what I'm aiming for.
Michel Barnier there. Well, Brian's going to wrap up the business with a check-in on the day's trading action, Brian.
Stuart, Asian indexes losing some ground on Monday amid some fairly unwelcome economic data across the region. Japanese GDP growth for the second quarter coming in below expectations at a 2.9% annual rate. That's going to limit the Bank of Japan's ability to hike interest rates as it tries to strengthen the yen. The yen already at a 9-month low against the dollar. It gained a few days last week, but it's now continuing its slide on Monday. The Nikkei in Tokyo down by just under 0.5%. Chinese consumer inflation, meanwhile, also coming in lower than expected at a 0.6% annual rate for August. China's been battling the specter of deflation amid a sluggish consumer demand and a real estate crash. Hong Kong's Hang Seng Index down 2%, the Shanghai Composite down by 1%. European indexes we're looking at here, meanwhile, shrugging off concerns of a slowdown in the U.S. labor market after Friday's jobs reports mixed expectations. Investors looking ahead to an interest rate cut from the European Central Bank this Thursday before the U.S. Federal Reserve issues its own widely expected rate cut later in the month. We see there all major indexes up in the neighborhood of around a third to 0.5%, a little bit more for the FTSE in London. So the European European markets taking that in stride, that U.S. jobs report. I guess looking ahead to the ECB's rate cut later this week, Stuart.
OK, we will be here on France 24 as well. Thanks very much, Brian Quinn, with the business news.